Hello everyone, welcome to Proinvest Nirmiti knowledge sharing series. Today we are here to talk to you about the mega merger HDFC and HDFC Bank. With me I have Rishabh Doshi. He is heading research at Proinvest Nirmiti for the last 4 years, and he is a CFA by qualification. He's going to help us understand about this merger.
Hi Jaydeep, thanks for having me here. So I don't think of a better way to start this financial year with a mega merger.
What's your take on this mega merger? How is it going to pan out?
So, coming to how big it is, the merged entity is going to be the 63rd largest company by market cap globally. So, that puts the Indian banking financial system on the global map for us. And secondly, always we thought that, at some point these businesses had to be merged. Given how interrelated and interdependent these both entities are, and at the end of the day is banking. If one company does just housing loans and the other company does pure banking, it's really very difficult for them to operate continuously. So at some point of time the merger was due. So I guess the real question is, why are they merging now?
So why do you think they're doing it now?
So, if we just go down, 10, 20 years down the line, there was a serious regulatory arbitrage between an NBFC or an HFC and a bank, in terms of supervision, liquidity coverage ratios, and also in terms of NPA recognition. But, as we have progressed, the RBI has smartly, that regulatory arbitrage has vanished. And, now the second reason is that, HDFC has become very huge. At this scale, for them to raise money from the bond market, it's very difficult, given that, India's bond market is not that developed compared to US or European markets.
So yes, I wanted to know, now HDFC has been a wealth creator. Both HDFC and HDFC Bank have been wealth creators for several decades now. Is this merger also going to be a win-win situation for the shareholders this time?
So if we take a broad-based view for, in banking, the most important thing is scale, and the second important thing is cost of funds. So, if you can get a large scale and lower cost of funds, at the end of the day, both entities would benefit.
Correct.
But, I personally think here that HDFC Limited has a slightly more advantageous position, because all these years it was always valued as a holding company where it held investments in HDFC Bank, HDFC AMC and HDFC Life. And I think even the management of HDFC Limited slightly agrees with this, because I've been reading their past presentations, and they always have these two slides where they talk about the valuation of HDFC's core business if we take out all their holding companies' valuation. So they value it with two methods, and the price to book of HDFC's core lending business comes out to a mere 1.2 to 1.7 price to books, which is very cheap for a business which has a pedigree of HDFC, given their scale and leadership. And then coming on to HDFC Bank, earlier what used to happen that HDFC Bank is the largest originator of loans for HDFC Limited. So they used to originate the loan or pass that file to HDFC Limited, which used to underwrite that loan, and then HDFC Bank would again buy back that loan from HDFC Limited, and it would then keep it on their books. So this was a very complex procedure. So I think that now this gets simplified. And secondly, there are certain types of features, like a very common feature is SBI's max gain feature, where you need a current account along with a housing loan to offer that. So I think they can step up their game when it comes to product development in HDFC Bank's housing business, and all in all, operationally it will be very simplified going ahead.
Fantastic. So investors don't need to really worry when they are with HDFC. So you rightly said about this merger and about the complexities. So everybody's wondering what happens to the subsidiary companies, HDFC Life, HDFC AMC, HDB Finance, which has been trading in the off market quite some time. So what happens to these subsidiaries?
This is a tricky question, and there is not a definite answer because at the end of the day, the regulators and especially RBI gets to decide what's going to happen. But let's just take a step back and let's really assess what does the regulator at the end of the day want. If you look at the commentary of RBI, they want NBFCs, which the larger ones, especially the ones with market cap of greater than 50,000 crores, to come under the banking umbrella. So that is their main agenda, so that they can supervise them in a more comprehensive manner. So there have been past examples like currently IDFC wants to reverse merge their holding company, but before doing that they'll have to sell their mutual fund business. So these are complex things, and at the end of the day RBI will decide. Recently Axis wanted to acquire Max insurance business, but the RBI told them that they cannot hold more than 10%. So ideally what we understand that HDFC wants to increase their stake in HDFC Life, but the RBI's point of view is that for a bank the depositors are the first priority. So in case anything happens to the life insurance business, they want the banking business and the depositors to be the protected people, and that is their first preference. So it's very tricky to answer at this stage, but let's see how this pans out.
Right. Interesting. Considering the complexity of the deal and the size, there will be several approvals to be taken. So what, according to you, what would be the timeline for both these entities to get merged?
So currently it would take around 18 months for the merger or the transaction to complete. But even after that, I guess they'll take 6 months to actually merge the operations, convert their existing HDFC limited branches to banking outlets. So all in all, I guess for an operational transformation, it would take them around 2 years.
So Rishabh, what would be the impact on since these both merger entities are going to be real large, about 15 lakh crores of market cap? It has been a darling stock for all these investors, and now with the mega merger, what would be the impact on the index funds, the MSCI flows, FIIs, and the mutual funds who are currently holding these companies?
So on a broad based, currently after post merger, the HDFC bank's weight in the Nifty 50 would be approx 15%. So it would become the largest component of the Nifty 50. Secondly, in this merger, effectively HDFC Limited's current shareholding in HDFC Bank would get cancelled, and the resulting merged company would be 100% publicly owned company where there would be no promoter holding. Because of this, a room opens up for FIIs to increase their holding by around 7%. So we could see some FII holding in the near future. I also remember that pre-COVID, HDFC Bank had hit their foreign portfolio holding, and many investors, FIIs, and even NRIs couldn't increase their stake.
Correct.
But now there can be an incremental 7%. And coming to the bank Nifty, that is interesting because this entity would be somewhere close to 45 to 50% of the bank Nifty, but because it would be a huge exposure, their weight would be capped to 33% in bank Nifty.
Interesting, very interesting. And yes, you rightly said that the FIs were always ready to buy, and most of the times the limit used to be full, and they were never allowed to buy beyond certain point. So maybe now they have some reason to cheer up. How would these synergies play out now? Because the investors are there any specific points that you would be tracking closely, given the track record of HDFC in terms of handling such mega mergers or demergers with a very efficient team? But what are the points that you think you would want to track very closely in the next couple of years?
So in terms of synergies, the main thing which I think would happen is that the cost to income ratio of the combined entity will go down, and there could be further scope to reduce that also. And secondly, the main synergies in banking are scale, as I mentioned, scale and cost of funds. So imagine that HDFC Bank's CASA which can be lent to, or which can be originated to create larger housing loans. This would create higher NIMs for them in terms of their housing business.
Okay.
And in terms of what we should watch out for is that HDFC Bank has disappointed investors and even customers in terms of technology. So even recently they were banned by RBI to issue new credit cards.
Yes.
So we should closely watch out how are they working on the technology side. And secondly, what I think is that what will happen till the merger in FY24 is that the ROEs of both the entities could come down because there are certain capital requirements which they'll have to preserve on their balance sheet, and that's why my guess is that they'll preserve more capital going ahead.
Yeah.
And they could reduce dividends in the meantime because they have to meet their SLR and CRR ratios.
Few things to observe is obviously the technology thing, integration, and also maybe the branches that are going to be there, which are going to merge with each other, and how effectively they do it is one thing I think everybody would be closely following. So now we are looking at a mega cap company, a banking company in India. Is merger the only way for group companies to enhance shareholder value? Or do you think there are various ways of handling, scale and going to the next orbit?
So it's not always compulsory, but coincidentally, if we take India's two largest companies, like one would be HDFC Bank post merger, and the second one would be Reliance Industries. So there are a couple of interesting things happening here. So HDFC Bank is merging HDFC and the banking business. So there, the HDFC Limited was undervalued because of the holding company discount. This merger creates value for all shareholders. Coincidentally, in Reliance, what we are seeing is that is going through the exact opposite process, where they are going to break down and list their retail and their telecom business to create shareholder value. So what I think is that the person running the business and taking capital allocation calls can play an important role to create shareholder value and to drive long-term sustainable growth by taking such corporate action initiatives. And these really, as companies become very huge, these actions can drive shareholder returns to another extent going ahead.
Yeah. Perfect. Because I am sure, because these great managements, they are always termed, Deepak Parekh has been termed as one of the finest leaders in India, and I think to my knowledge, among the very few companies where we don't, in India at least, where there's promoter holders is almost zero. Yeah. So, and they have created enormous amount as well. So usually the tick mark used to be where that promoter holding is high, is supposed to be a good girl. It is very interesting that from a banking point of view also, and so interesting. Yeah. So it's totally depends on the management is what you want to say.
Correct.
Right. Yes, so it's one of the most interesting mergers that we are going to witness in the history of Indian stock markets. I'm totally excited to see how things pan out now. Rishabh has given wonderful insights about how this mega merger can affect both the shareholders' wealth, the synergies, about technology integrations, about the return on investments, several aspects that one will have to follow, the regulatory things, and I'm sure this is going to be a good case study for all future mergers also, which will take place in the banking industry going forward. So stay tuned, and we'll share further updates with you about all other learnings that we go through in our day-to-day routine and our studies that we conduct with the team. Yeah, I hope you like this. Please do subscribe to our channel so that we can share more and more knowledge and our learnings. Our learnings for last 20 years have been enormous. Indian markets have evolved over time, and I think this is the right time that we start this series and help all our investors deepen their knowledge about wealth creation, about investing in stock markets. Thank you so much.